Hello, Uncle Jim here. Today I want to share with you several securities that I'm looking at. These are value companies and also an ETF that I think are great investments at this time with this crazy market. I'm actually going to go into them. I've got them in a watch list that I'll talk about each one. I'll talk about why I think they're good investments and actually share with you some of the options chains that where you can see the premium is really good. So stay tuned. I think you're really going to enjoy what I have for you. Thanks for joining me. Now, before I jump into the watch list, I do want to mention a few things, some important points to discuss, mainly because I've had some interesting questions from different people in my different memberships. And one thing I want to share, and I've talked about it in previous videos, I'm a value investor. I'm looking at wanting to own all these different stocks and ETFs that I sell options on. I'm not just selling options to make money. So my overall goal is with most of these companies is to own them at some point and to own them at really good values. And not so much just to earn premium. I know in the past I primarily have sold options, but I'm going to start letting some get assigned, and I'm going to start going to changing the way I'm doing things because at some point when this downward trend stops and we start having a recovery in the market, it's going to be a really good time to own the stocks and actually sell covered calls on them. So I just wanted to mention that just so that people understand my philosophy and how I like to do things. And also I like safe strategies. I don't like if I can't find a good trade, I just don't make a trade, and I'd stick to things that are safe. I primarily do covered calls, cash secured puts, and vertical put credit spreads. I used to do vertical call credit spreads, but I stopped doing those mainly because I took a big loss with Microsoft. And another piece that I wanted to mention is that I'm looking at doing more of the option wheel. In the past, I haven't done it as much. I've just primarily sold options, but we're getting to the point where there's some really good values out there and some companies are paying some really good dividends. You'll see that when I share the stocks later in this video. But I'm actually going to truly do the options wheel. I'm going to let some of these get assigned so that I can then later sell options or sell call options on them. So in a sense, if you don't understand what the options wheel strategy is, it's simply you sell a put, and you pick up some good premium, they potentially get assigned to you, and then once you own them, you sell a call, and they may get assigned away from you, and you can do fairly well with it, especially I think it when you're towards the lowest part of the market. So it's something I haven't done as much, mainly because I've been able to roll. And I'm getting to the point with some of these stocks that they are getting harder to roll. So that's one thing I'm definitely looking at. And then I've also made some updates to my planning worksheet, and I may share that in a later video. But I'm adding more details, and I do have like what I'm sharing with you today. I do have a list of my favorites, and I'm going to go into a little bit more detail in the future with the planning worksheet. I'm actually not just going to list the securities and why I like them. I'm also going to talk about what strikes I like with them and why I like those strikes as well as expiration. So a little bit more detail. If you have an interest in taking a look at my memberships, everything's listed below. I have two levels, and a basic level is $10 a month, and you get access to my trades as well as you get access to any of these spreadsheets, and you can communicate with me. Now for the higher level, I do have a weekly meeting and a Discord group that we get pretty active. We talk about a lot of things, and it's a pretty fun group to work with. So, and then this next part of the video, I will be jumping into my watch list, the current watch list that I set up for this video, which has got those 5 specific securities. So we'll talk about those. And as always, if you have any questions, please add a comment below. Hit that like button. It does help the channel. And please subscribe. So with that being said, let's turn to this next part of the video where I actually go over the securities. Okay, I've opened up my Schwab account, and I've actually brought up a watch list that I've set up just for this video. And here's the 5 companies. I'm going to go over each of them. So let's start with the first one, which is Buckle Incorporated. And this, if you're not familiar with them, they own like Wrangler. They own a lot of clothing lines, and they do quite well. You can see Schwab rates them with an A, and right now they're not overpriced. They're right around 32, and let's see, the 52 week was high was 57, so they're pretty far off their high. So they, if we look at a 1 year, I think they're pretty close to their 52 week low, 26, or what is that? Yeah, 26.56. So they're off a little bit from their low, um, but not. You can see the trend line is right here, quite a bit above where they are now. So if you pick them up, you could pick them up at a really good value at this time. They have a good dividend. They pay over 4%, 4.32. Their price to earnings is really low, 6.34. I think they've been paying really kind of amazing dividends. So you can see they've had special payments of dividends. So if you look, the yield is based on the 35 cents times 4, and that's where they're getting that value. But they did have a special dividend in December, which was nearly $6, and I think they also had one in 2020, a $2 in December at $2.30. So they'll do special dividends and pay a bit more than what they typically pay to different people or to their investors. So that's kind of amazing to me. You don't see that happen very often. Um, let's go back to the summary page. Let's actually look at earnings. And I think their earnings has been fairly good. Yeah, so they've had their last one was Q1, and it came out May 26th, so fairly recently, and they beat it by 25%. That's pretty good. And then if we look at annually, so annually they're projecting they're going to be a little bit down from this past year, but so far their first quarter, estimate was way below what they ended up getting actually. And then you can see the revenue is up, and their cash flow looks like it's good too. So overall a good company, and it's not too expensive. $32 a share is not bad. And I think if you picked it up around 30, you would be, let's look at the dividend. Yeah, you would be getting almost a 5% dividend. Um, let's look at the actual options chains. And you can see there's quite a bit of open interest. So yeah, you could see this is 15 days out. Let's look at the Greeks. So close to a 20 delta, 15 days out, 30 to 40 cents. Not bad. Not the greatest either. Okay, here go out a little farther, 43 days, 18. So an 18 delta, and you're picking up between 55 and 65 cents. And you do have some lower puts you could purchase, like 20 cents. If you wanted to take a little bit more risk, you could do a $30 put, and it's a 33 delta. But again, if you're going to end up doing the wheel, it may not be a bad strategy, especially with such good dividends. But now if we go even further out, here's the 17 delta, and you're 85 to a dollar, so almost $100 on one contract, which isn't bad. Let's actually expand that to all. I just wanted to see if they have some inexpensive ones. Looks like they do. 30, 35. But everything else is fairly high. Here you can see 95 at 15, which is, I'm looking at the ask. I was just curious to see if there were people that had been buying some puts too. So it looks like some people have bought at 95. So interesting. So that's the first one. That's Buckle. It's a good company to own. Like I said, I think it's going to keep trending. I think it's pretty close to the bottom, and when we hit a recovery, and I have no idea when it is. I'm not thinking it's anytime soon. It may be maybe 24 before we get out of this crazy market. But I don't know. Summers are usually a little bit worse. So maybe after the summer we have a little bit of a bounce, and then we're going to probably trend sideways, unless something bad happens or something really good happens. So let's go back. Actually, let's go to the watch list. And let's go back. And so that was Buckle. The next one is MDC Holdings. And it's also fairly reasonable. So you could do these in small counts. This one is 37.63 is its current value, but you can see it's really low. But it does pay a really good dividend, 5.3%, and you can see retained earnings is really low, um, which is good. And let's see, is it pretty consistent dividend payer? I believe it is. Yeah, it's actually was flat back in, what is that, 14 and 15, but it's been increasing every year since, and it looks like it by the end of the year at 50, yeah, it'll be $2. So again, this will be probably close to this area up here. So they're increasing dividends. Let's see earnings, and they've got good earnings. So I don't know why they've been hit so hard. But you can see they're up quite a bit if we switch to quarterly. So their last quarter, so they had a good earnings. They were had almost a 6%. The actual was actually almost 6% above what the estimate was. The previous quarter was down a little bit, so it was down almost 11%. But they're projecting 250, and of course it's an estimate. They're projecting that they're going to make that amount, but there's no guarantee. So their earnings look good. Let's go back to annual because it is a little hard to see. So they're what they're making revenue wise. So it's probably related to inflation that they're having to pay more, but still their numbers look good. And again, they're not pricey right now. They're closer to their 52 week low, or they're very close to their 52 week low. I think it was what 33 is what that's showing, and then they're at 37. Um, so let's actually take a look. Let's look at their ratios. I think they've had really good ratios too. Um, Return on equity 24. I think their coverage for the dividend is really good. So our earnings per share growth has been good. Um, yeah, coverage ratio 516, so they can afford to pay those dividends. Um, so let's actually look at options, and let's take a look at the options chains. Fairly good activity. This is 15 days out and around 35. So a 20 delta would pay $40 to $55. Let's do more strikes. They do have some low ones. So at 19, you could pick up potentially for 5 cents or 10 cents up to 22. So it might be a good idea. You could probably write some pretty good vertical put credit spreads on this on MD Holdings. So let's see here. This is pretty close, closest you can get to a 20 delta. So 40 to 55 cents, and that's 15 days out, so not bad. Let's go a little farther out. This is 43 days out, and the 20 deltas right here between 65 cents and a dollar. Or you could go up to a 25 delta and pick up almost $100 per contract, or go the other route, $55 per contract. And you do at 28, looks like you've got some that are not as expensive. You could, looks like 30. If you were doing a market trade, you could buy a 27. So we definitely could do some vertical put credit spreads with this, um, and pick up some pretty good income. And it's let's go back. Let's go back to the watch list. Um, Probably not the best way to do it, but I wanted to look down, and so they do their household durables. Let's look at their description. So, yeah, they engaged in the business of home building and the financial services company. Segments include West. So they do have some segments. Well, they do have California, Arizona. It looks like they also do escrow. They do a lot of stuff relating to the housing market. So if the housing market takes a dive, it could be a negative impact. But where it is now, it's not, it's a good value. Let's go back to 5 years. So it looks like it dipped. Let's look at charts. I'm just curious. I want to play around a little bit. Now, if you guys have never worked with Schwab, you can see it here. Let's go back to, I don't know how long they've been around. Yeah, so they were way higher and then came down and they were coming back up. So they seem to be well managed. Schwab equity rating is a B, which is good. Let's look at. I don't think I looked at ratios for them unless the ones I did was no, that was the previous company Buckle that I looked at. So return on investment 24. Actually, maybe it was them. Yeah, maybe it was them. So um, that's MDC Holdings, and again, a company I've never looked at before, but it's been added to all my watch list and something I'm interested in. And now 3M, you guys probably have heard of 3M, but the reason I'm adding it is it's come down quite a bit. You can see it was close to 200, and its PE has come down, and it's paying over a 4% um, dividend. And I think its earnings have still been up, even though it's been hit pretty hard recently. Yeah, so its earnings have been up. It's up 7%. They're thinking they're going to do 7% more in earnings this year compared to last year, which is good. And then they're a slow growing monster company. I mean, they're huge, so they're looking at the revenues are only going to grow a little bit, not by a huge amount. And then cash flow has been good. And I think dividends, I think they may be a dividend aristocrat. Let's see how far it goes back. I think every year they've been increasing it. I believe they're a dividend aristocrat, so they don't increase it much recently, but when you're paying $6 a dividend, and I believe their earnings, they have plenty of earnings to cover those dividends. So they're bringing in almost $10 and they're paying almost $6. So yeah, they do have a good coverage ratio for the dividends, and they've got it's a good time to buy puts on them. Now they're up today, so the puts probably aren't going to look as good. So that's actually 1 day. So let's go. I typically like to do 30 days, so let's do 30 days. And then let's look at Greeks. Let's do 16. So here's the 24. Actually, let's do all. So let's look for what I like is a 20 delta. So here's just shy of a 20 delta, 137, and it's currently 146, and it's paying 121. So a good fair amount of premium. And now let's see, 137. Let's see what 125. So 69. A little bit pricey for the buying the outer arm for a vertical put credit spread, but that's what I was looking at. So at 137. Now, if you wanted to take a little bit less risk, you could do the 136 and pick up 101. And let's go a little farther out and see how much they're doing. So again, here's the closest to the 20 delta, 132 at 136. And you do have, it looks like 57, so that's not bad. You could almost pick up 100 if you went up to 137. You could do a 137, 125, and you would be pretty close to $100 per contract, which isn't bad. Um, and it would require, a little bit more than I think $1,200 in cash or margin, but so definitely something I'm keeping an eye on because 3M has been too pricey for me up until recently. If it continues to go down, these numbers are going to look even better. And if it goes down, I definitely would love to own it around 130 if it goes down that low. So I might even go farther out and see if I could pick it up around 130. Here, yeah, it's a 12 delta, and you could pick up almost $90. So you could do a 90.48. And sometimes with these big boys, I'll go farther out. So if I wanted to go out to October, let's see what 20 delta is. Okay, 18. So that's the closest to a 20 delta and 18 delta. But you could pick up $288. And if I did the 115, that's over 100. Yeah, so that's over $115. But you could see if you own this, this is the same case with the covered calls. So if you were doing a covered call, say you picked it up at 130 and or closer to this price, you can see it, you can really pick up some good premium. So at 20 delta, you're almost picking up $235 per contract at 165. So I encourage people, don't overlook owning some of these and then writing covered calls because you can do quite well with covered calls. And if I've been able to roll most of my covered calls fairly easy. The one exception was again Microsoft, and it just went through the roof. It went from I think like 230 up to over 350 or something in a short period of time. Of course, it's come down like everyone else. So that's primarily why I was looking at 3M. I like the idea of working with 3M or looking to try to get 3M. Let's go back to the watch list. So the main reason that I was keeping that on the list is just because it's come down so much. I also like Target. I played with the idea of putting Target on here too, but I have not. Now Truist is the bank I use. You can see it's also pretty near its low. Um, it pays a good dividend, nearly 4%. So if you sell some puts and pick it up a little lower, you definitely could get over 4%. Um, its earnings have been fairly good. Down a little bit though this year. They're projecting to be a little bit lower than they were last year. But look at their revenue. Revenue's going through the roof, and their cash flow looks good. Now I'm familiar with Truist. I know at one time it was, I've been banking with SunTrust for years. It merged with BB&T. And I literally have a neighbor who's been working on the merger, and they've just pretty much have finished it up earlier this year. So I think they're going to have some of their expenses that they've had to pay for the merging of the two banks is going to drop considerably. And again, I really like Truist. It's I've been banking with them a long time, and I like the changes they made. I've been happy with them with the changes. They seem to have improved their customer service some, and it's been good working with them. I've got both my business accounts as well as my regular checking account with them. And then options, they've been pretty good with options. So yeah, they've got a lot of activity, a lot of open interests. So you can see they're up today. So the puts, well, actually, some of the puts look okay. That's 15 days out, but you can see they've got some go 43 days out. And it's weird that the puts are up on when the company's up today. Let's actually change this a little bit to Greeks. And let's see, we've got, where's the 20 delta? So it's right around here, 45. So being it doesn't move that much. So let's look over here. So yeah, you've got some pretty good option interest, and you can pick up some pretty good option premium. Let's look on the flip side when we go to a 20 delta, which is in between these two. So you can pick up some good cover call premium too. Um, so it's a smaller. Well, it's not a smaller bank anymore. But it's like I said, I've been happy with them. I'm looking at probably selling some puts in this pretty soon, and you can see you can pick up it looks like you could buy a put at around $30. Let's go back up here. Let's look at all. Yeah, so you can pick up at $10 at 30, which isn't bad. So you could do a 30 or 20. So you can buy some puts pretty inexpensively, 15 at 30. Um, let's look at where the 20 delta is. So you could do a 45.35. Wouldn't be bad, $40 for each contract. Um, take a little bit more risk and do a 47.50 and a 37.50, and you'd be almost at $100 there. Now you are taking more risk, and it very well might get assigned. But like I said earlier, this is one of those stocks that I'd be willing to own. So Truist is another great option, and another that's kind of a play on words, but it's something else I'm looking at making some trades in. So now let's jump back to the watch list. I think I have one more. Yeah, so IGR is iShares Small Cap ETF, and this is an ETF I've been working with for years. It's done really well over the years for me. It's come down a bit, but it's not way overpriced, and it's I think when we come out of this downward trend or this bear market or down market, I think it's going to come back up pretty quickly. It invests in some really good companies. It has fairly good distributions, almost, what is that, 1.6, the distribution yield. So you do get a little bit of dividends with it. Performance, it's been relatively good over the years. So you can see here, um, so the blue is the IGR, so it's done quite well compared to some of the other indexes. And then here you can see year to date, but what I like to look at is this. So the 10-year, it's been almost 11, and that's what I saw. I saw really good returns. I think I've owned it since probably early 2000s, and it's something good to be invested in the whole long term. It doesn't pay the greatest dividend, but it growth wise it seems to grow really well, and you can get some really good options premium in here. So yeah, you can see not a whole lot of open interest on July 15th, but August quite a bit, and you can see for $100. Let's actually look at the Greeks, and let's go out to 16 strikes. So if we go to 43 days and we do the 20 delta, right around $1.30 at 95, so not bad. Let's go a little farther out for 78 days, which is not quite 3 months, between 2 and 3 months. Actually, let's come back up here, and looks like 14 days isn't quite enough. Let's do all. So if we look at, let's go to the 78 days. And here's delta, so let's look for delta 17.8. So you're talking 130 at $90, and then you can buy. So at 90, you can come down here to 80, 90, 130. That's not real good. You can take a little less risk and go to the 85. So you could do 85.75. Does look like someone has bought a lot of the put, so they're asking 75. That made it a little bit more difficult, but you can go a little farther out with this. Like I said, It's even better on the call side. Let's look at the calls. Yeah, so if you like at 102, I could sell a call. Of course, this is almost half a year, but I could do, if I do a 20 delta, it's around $130. So you can really do quite well and add a bit of a more bump, once you own this. And I think I own 300 shares of these, and I probably every 3 to 6 months I buy or I sell more covered calls, and it adds another 4 or 5% return um, to my iShares. And I've never had these get called away. I always do it right around a 20 delta, and it's worked out quite well for me. So that's it. Those are the five. Let's jump back and we'll look at them again one more time. Yeah, so these are the five that I'm looking at right now. And I think they're good values. They're good companies to own. You can make fairly good dividends. So I encourage you to take a look at these and kind of do your own due diligence and be sure they're companies you want to own. These are companies I want to own. And so that's about it. I hope you enjoyed this. Please add a comment if you don't agree with any of these or you have any experience with these. I love it when people add comments. So as always, I hope you have a wonderful day and thanks for joining me in this video.